Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. The start of the original big move up back in November last year was generated by the large April to late October 2024 ascending wedge pattern. Following this, the first leg up was from mid-January this year, pushing and closing over the early December 2024 high at 348.35 and into new territory for the second leg higher, such that by early February the market had broken over the latest 50% projected Fibonacci line at 402.05, reaching up to a high at 429.95. Prices since then have been making lower highs and lower lows, and thus showing some initially low-level bearish doubts, especially with prices staying below the 50% projected Fibonacci line of 402.05, and thus these bearish doubts have grown. All these actions allowed me 4 weeks ago to draw my first bearish Andrews pitchfork here of any sort, pitchfork, for quite a while, and it was for the early February to early March move. However, this pitchfork did not work, and I have finessed it into the shallower dark blue bearish pitchfork you see on my daily chart. However, last week prices breached, though did not stabilize, below the dark blue lower time, currently at 342.20, as well as the mauve medium moving average, currently at 353 3/4. Though they did not stabilize down there, and we are today pushing up over the mauve medium moving average and towards a gap left over from 2 weeks ago between 362 to 362.60. We're also today in between the overhead declining dark blue middle time, currently at 369.70, and a dark blue lower time below, currently at 342.20. Now, a significant feature from 2 weeks ago was the end of week close below the significant early December 2024 to date bright red uptrend, currently at 371.40. You see, as I said last week, and I quote, the move down today, so that is Monday last week, the move down Monday last week was itself a gapping move lower, and it left unfilled what looks like it might leaves us with an unusual situation of a late January, early April island top pattern. If that is the case, well, then we have a significant bearish pattern here. Now, it is not an ideal pattern as the gaps do not fully align, but there is cause to view it as such. End of quote. Oh no, I keep going on. Hence, if all this goes ahead, we would have a primary target X down in the 320.85 zone and a secondary target X1 down in the 295.25 zone. Are these doable? Possibly yes. You see, below we are close to the mauve medium moving average and a dark blue lower time. We also have the significant early December high at 348.35. And if all three of these are taken out, then there is little until the turn of the year congestion band between 309.90 to 324 3/4, which has the lesser Fibonacci line in there at 320.25, just below target X. End of quote. Well, last Wednesday indeed, we made a valiant attempt lower down to 323.90, but not good enough to reach target X in the 320.85 area. And I am now starting to wonder if that all it was good to do right now. I'm using the gap overhead and a dark blue middle time as a litmus test for the next week or so. If prices fail at those levels, then we may well be that we try again to target X below and target X1 below. However, if they don't and prices carry on higher, we'll have to start thinking about retiring those downside targets. Now, there's something else to look at here, and for this I'm indebted to Ray Bradbury for asking me about New York coffee 8 weeks ago. And I went at the time to my longer term charts, the monthly charts, where we can see some possible insights. You see, on the monthly longer term charts, I noticed a pattern that had not been immediately obvious to me at the start of 2025 when I last reviewed these charts. It is a multi-year 2012 to 2024 very large reverse head and shoulders bottom with a bright red neckline on my chart currently at 273.80. The break higher over this neckline has already reached its primary target, but had still open for the moment the secondary harder to reach, and it's a much harder to reach target X up in the 433.35 area. What is interesting about this is that nearby to target X is the next 100% projected Fibonacci line at 433 3/4, quite close in the scheme of things. So what does this mean? Does this mean the market will turn at these levels? Up to now I could not say, not yet, though we did have a monthly shooting star pattern, usually seen as a bearish pattern in February, an indecisive doji cross with a long tongue in it on top of it in March. And I'm now wondering right now with the action during this month of prices pushing back down below the dark blue uptime, which is currently at 373.85, and by a considerable distance, whether, as I said last week, whether we have already topped out. I've said for weeks now that, and I quote, if there ever was an area where the market could hesitate on the top side, then this 433.35 to 433.75 area would be a reasonable choice, end of quote. I also added to watch that area and any approach to that area very closely. It may even be that February's shooting star pattern may have been the final move in the attempts higher, managing to reach just under target X. This is now becoming a solid idea as February and March's actions could have left us with a possible pipe top pattern. Watch this space carefully. London coffee. 17 weeks ago I drew a new large pattern that even now encompasses all the recent significant elements, and it was very, very prescient last week. It is not ideal and it's also quite large, but it's still there. It is the bright red shallow large bull channel, currently 47.62 to 60.49. Within this pattern sit other patterns, just about, and most retired, but some not. We still have a dark blue early May 2024 today uptrend, currently at 46.23. That has since, when I last spoke about it, been reassigned lower out of the bull channel. A bright green early December 24 to early April 25 uptrend that was broken 3 weeks ago, which together with the purple February to date downtrend, currently also at 5501, formed a sideways triangle between mid-February until early April, when we had the break lower out of this pattern. Now this pattern has reached both its primary and secondary targets below. There was another pattern to consider here, one I pointed out 8 weeks ago. It was a late January, late February Adam and Eve double top pattern. The primary target was reached 7 weeks ago, leaving only a secondary harder to reach target at 51.28, still open, until late 2 weeks ago when that too was reached. I also said, and I quote, this target is just above the small congestion zone seen in late December 24 to January 25, between roughly 48.40 to 5100 that formed back then a small double bottom, end of quote. The base of this small double bottom was in the 48.40 zone, and prices sailed right through it. But interestingly, whilst pushing down through the 4800 level last week and even the bright red lower bull channel line, there were no closes below this bull channel line. Indeed, it acted as support early last week and was breached but not broken before later on that week we gapped higher and back up towards the mauve medium moving average. I should also point out that I said last week, and I quote, that apart from the bright red lower bull channel line, we really don't have that much until we reach the 50% Fibonacci line, the May 24 to February 25 move at 45.52, which ties in with the early December lows at 45.40 and 45.07, but doesn't look that strong. However, we have a wide congestion zone further down, starting at the April 24 high at 43.38 down to the lesser Fibonacci line at 40.95, mainly made up from lesser Fibonacci lines as well as the early November last year low at 42.41. This would seem to be a possible halt, if only temporarily, to any significant moves lower, end of quote. Well, prices took fright at being below the bright red lower bull channel line and actually on approach to the 50% Fibonacci and below at 45.52, enough that they shot higher, but now they have the overhang of the market above them from roughly 5,300 up to this year's high sitting above us, and I'm wondering whether whatever rally we have, well, whether it will soon start to peter out. Now don't get me wrong, we have a strong reactionary move back up within a good looking bright red bull channel, but we also have some nearby overhead resistances that may come into play on any attempt over 5,300.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.